When you are purchasing a home, please make sure you're dealing with an experienced loan officer and agent. There's so many pieces to the transaction that you may not even know. And with that being said, everyone does not have the best interest in your purchase. Homeownership was not something that was generationally passed down. Typically, we're not given that option. It was something that I had to totally educate myself on.
Investors have so many tools in their toolbox, and we're here to let you know you have those same tools available to you as well. Have you been thinking about purchasing a home and today's interest rates just made home ownership unattainable? What if I told you there's a way to rewind the clocks and make yesterday's price today's price? Well, guess what? I'm actually here to tell you there's a way to do this with the Assumable mortgage. This is a way for you to make that home ownership dream that you've been having a reality. Stay tuned to the Prepare to Compete podcast as we educate you on the importance of Assumable mortgage. Hello and welcome to the Prepare to Compete podcast, where we talk all things VA benefits, real estate, entrepreneurship, and more. Kenneth Davis, how you feeling today, my brother?
Oh man, I'm excited, just ready to assist and provide all the information that we can. So hopefully we can be able to go ahead and provide all the education on this #1 veteran podcast.
Absolutely, absolutely. Really excited to bring the new education and attention to Assumable mortgages. Home ownership is just gotten to be unattainable for some, right? And you know, there's a tale of three different types of individuals, right? When you're thinking about our age demographic, you know, when they characterize it as like the individuals that purchased before and have, you know, $1,500 mortgage, right? And then you have other individuals that hadn't purchased yet, which they're on the opposite end of that spectrum. And guess what? They still have childcare. They have a lot of other expenses because everything just got so much more expensive. And it's like, well, how can I actually afford to buy a home and live if my mortgage payment is going to be $4,000 and I got to pay $2,500 for childcare and different things of that nature? And then of course you got your people in the middle, which they might not have kids right now, so they don't understand our pain, you know, with that childcare piece of it. But yeah, you know, it's really a tale of a lot of stories. But again, today we really want to dissect and inform you on how you can actually make home ownership affordable. And Kenneth, I know you're a part of that first group that was able to purchase a home, you know, actually way prior to 2020, right? And, you know, how would you kind of characterize your knowledge and your experience of the loan process during that time?
So for myself, just inside look, it was my wife and I's, it was our first purchase, right? First home purchase. It was a daunting one. And why I say that is not due to the fact of the qualification portion and so on and so forth. No, it was the information that was received. Obviously, we know the finance world is a total different space, right? Again, and that was something that you know we wanted to educate ourselves on. So understanding the loan process through and through. So much so, again, understanding certain fees, taxes, interest, so just so many different things, including buy downs. When you're talking about a VA home loan, it's so many different opportunities with that. But going through that process, it was just that, a process. So we were able to kind of get to the portion where at the end of the road, we were able to successfully purchase a home and delve into home ownership. But I will tell you, there's so many pieces to the transaction that you may not even know. And with that being said, sometimes everyone does not have the best interest in your purchase. And that's why it's very important to understand the process so you can be your own guiding light, or being able to ask questions or have a better understanding So you can educate the next person and the next veteran, because again, the VA home loan is something that is very powerful. And I think, that home ownership should be for all.
Absolutely. Definitely should be for all. And, a lot of times we just don't understand the vast options that we have, right? We just feel like, okay, well, I need to make sure I have my down payment, need to make sure I have closing costs, need to make sure I have adequate savings for moving expenses and that sort of thing. And I have to just go to a bank and pray that they're going to qualify me for the home of my dreams, right? And, a lot of us, we come into home ownership, we know sometimes it's going to be our first purchase and we're going to want to kind of move on from there, but we just aren't able to really approach it in that same investor type mindset, right? And investors have so many tools in their toolbox, and we're here to let you know you have those same tools available to you as well with the use of an assumable mortgage. And I know when you purchased your home, before, obviously interest rates were, a lot different back then, but did you have any knowledge or awareness of a assumable mortgage?
No clue, no clue. Every piece of information was provided towards me, towards outside sources, trusted outside sources, I must say. However, there was always provided outside sources because home ownership was not something that was generationally passed down. Most understand that home ownership is the cornerstone of wealth. Well, understanding that typically we're not giving that option. So, unfortunately, it was something that I had to totally educate myself on. Having a fair amount of education level, I was never taught anything in regards to home ownership. I was never provided any information in regards to financial industry. So being able to get with trusted personnel like yourself, people were able to give me the information that was digestible and understandable, but also provided me a guiding path for success. And I think that's one of the reasons why home ownership was possible for my family and I.
So absolutely, we want everyone to be educated when it comes to home ownership and really being able to come in, similar to how investors do, right? Have so many tools available to you in your toolkit. And again, that's what we're here to do and equip veterans, especially with that information, because the service that you provided to your country here, you definitely deserve that goal of home ownership, and not just one home. If you want to purchase multiple homes, you can utilize the VA loan to maximize doing so. So the power of an assumable mortgage. So first we want to really break down, Kenneth, what is an assumable mortgage, right? So assumable mortgage, you can get into a lot of minutiae and things, right, on the details of a mortgage and what type of programs and products. And basically, to kind of simplify it here, assumable mortgage is going to be, let's say Kenneth owns his home and he wants to sell his home and I want to buy his home. Instead of me going to the bank and getting a traditional loan to purchase his home, well, I can actually go and purchase his home directly with him and actually take over his loan payments, okay? And actually assume that loan, essentially, is what I'm doing there. And I really want to make it clear that this is a product available for VA loans and also FHA loans. So that's the other government-backed loan for non-active duty military family and veterans, right? So both of those loan products are able to be assumed. So what I would have to do there is basically go say, hey, Kenneth, you want to sell me this property for, let's just say, $500,000, right? Just to use, really good numbers here, because I don't want to say like 100,000 to make the math too easy. And they're like, oh no, it's not going to happen, right? So let's say 500,000. He wants to sell his house for that. I need to be able to qualify with his lender. Very important, right? I need to still be able to qualify for the loan, meaning have the income requirements, the credit requirements to do so. And I fill out a mortgage application with his lender, not any type of outside lenders of my choice, but his lender. It's very important. and they'll actually give him another form for me to fill out. I do that, they approve me for the loan, and I can actually assume his mortgage, okay? However, where it gets a little convoluted is, let's say Kenneth is selling it to me for $500,000, but he paid a little bit on it already. Let's say he only owes $400,000 on that property. That is where the trouble has been happening on why people haven't been able to take advantage of assumable loans, because where does that $100,000 come from, right? You know, as a veteran, you're able to have no down payment requirement, so you're not really thinking about putting such a large down payment down. So, you know, guess what, Kenneth? You know, in the past, how do you think people were actually, you know, assuming those mortgages in those type of situations?
In those type of situations, it really depends, I would think, you know, because that's such a large amount, right? Most people don't have $100,000 just laying in the backyard or in their wallet, right? It's tough. It's tough to say because you can say a lender, right? But now you're outside of a mortgage lender.
Exactly. Yeah. They were looking to get, you know, secondary financing, and it was very tough to come by that, right? So it was either you had a rich uncle or you were lucky enough to secure secondary financing, which, again, if you're an investor and you weren't looking to live in that property, owner occupied, and you were just going to sell that property as a flipper, something similar to that, then there's secondary lenders that would take that product. But as a traditional homeowner, those options weren't available to you at the time. However, now there's new systems in place because interest rates are so much right now and it's making it so unaffordable. There's actually lenders now that are taking second mortgages, particularly for assumable loans.
Now, so let me, as a buyer, right, as I'm the buyer, so there with the mortgage, I will be able to assume another veteran's loan to be able to take their already in place loan, and I'll be able to take that on to be able to purchase their property. But I must qualify for both loans, correct?
You must qualify for both loans. So you would get qualified for the $400,000 through a Kenneth's lender in that example, right? You would get qualified for that loan based on the seller's lender, and then you would qualify for a second mortgage through an outside lender, which there's some different new options here for that. We'll actually put it down below for you here. But what's really exciting about this is that, you know, once one lender starts offering programs and seeing some success, right?
Yeah.
Other lenders are gonna be to follow with
It
that.
becomes the new norm, right? Because again, I think, you know, we tend to forget, you know, if we're talking about historically, you know, our parents and our parents' were buying properties, get 10%, 12% rates. You know, we would think it's craziness, right? Because we lived in an environment where there were 2%, 3% rates, which was a great time. But I think, you know, with the way the market is going, I just think our generation are having trouble with home ownership because of pricing, right? So we can't tack that same 10, 12, 8, 9, 7, whatever percentage on a $500,000 home for a one bedroom. Absolutely. You know, it's very difficult. It's very difficult. So
and you raise a good point, right? You know, during those high interest rates for our parents and grandparents, what was happening is that the price of the home was still a very small in relation to their total income. And, you know, now we're getting in an environment where you're looking at your rent and your mortgage being 50% or greater of your income, and it makes it tough to really just survive.
Yeah, but now also in the economic environment, right? Inflation is just continuing. So with the price of the homes, not enough homes are being built at the rate that people are being made, right? Because we tend to forget, you know, you can always make anything else, but you can't make any more land, right? Just appears. So again, it's just become very difficult. I think for everything is kind of catching up at one time. And I think it's causing the Gen Zs and even millennials to come to a point of home ownership not being possible, no matter if they are meet the criteria for a VA home loan or VA home loan entitlement or any other program.
Absolutely, absolutely. So yeah, again, programs like these with the assumable loan is really great because it's going to force more lenders to offer similar products, and it's also going to look at the regular traditional market. And those lenders are like, hey, I'm not picking up as many new loans because people are doing assumables, right? Yeah. So they're going to kind of curtail and lower their prices a bit. And now, and with that, the market rate, and what we're going to go back to with the loan assumption, of course, you're assuming the individual seller's loan and you have to finance the rest, right? The rest of that financing is going to be at a market interest rate. But when you combine those two loans together, you're going to have a fairly decent interest rate. And that's what's most important. You may be buying a home from a seller that has a 3% interest rate. And let's say you have to finance an additional 100,000, 200,000, different things of that nature. And that may be at a 7-8% interest rate. However, when you kind of balance the two, you're still at maybe the 4.5% interest rate. So you're still sitting at a very healthy overall payment. And that's what you really want to look at. You always want to look at, okay, what is the total payment for this program? And am I going to be able to comfortably afford it? And I say comfortably because that is very much so important, because sometimes you can get in situations where they say you could afford it and you qualify, but based on your spending habits, it's not the right thing to do.
Yeah, true indeed, true indeed. There's so many different pros and cons to loans, why should I choose a VA loan? Why can't I choose a FHA loan? Why should I choose just any loan product? Well, why should you think about the assumable loan?
You should think about an assumable loan because the goal with that program and that product is actually to make home ownership affordable and attainable. So it's ultimately going to save you money on your overall mortgage payment. So that will be the biggest pro in assuming a loan. If it does not save you money on your overall mortgage payment that it would have been if you would have just purchased that home outright, then it's not the right product to enter into.
Understood. So basically, if I am going to assume another veteran's loan, it would behoove me to only assume that home or that loan if it is only going to save me a healthy monthly payment in which I would purchase a home very similar.
Correct. That would be the reason to do that, if it's just going to save you on those grounds. And, in most cases it will, right? Because with those programs, they have a lot of safeguards already in place. Most of the lenders, when they're doing those loan assumptions, they're making sure that the assumable portion is at least 50% or more of the total loan amount. So meaning if you're purchasing a house that's going to be total of $500,000, well, the assumable loan has to be at least $250,000 of that $500,000 loan. Because ultimately, if it's not at least 50%, then now you have a high interest rate for a secondary loan product, which can be very risky and also more difficult to insure sometimes. So you want to make sure that you have a certain ratio there.
It makes sense. And also, I guess it would also, those requirements will be in place because, again, we got to have some skin in the game, right? They want to have a little meat on the bone to be able to be profitable.
Absolutely. Yeah, they're not going to be letting you take over a loan that's almost paid off, in that scenario. So, you have that, but of course, there's going to be certain cons as well, right? So, I guess one con of taking over a assumable loan is if you were having a non-veteran assume that loan, right? Because you can't have non-veterans assume the loan, and you end up not having your eligibility, right? Or if you even have a veteran assuming your assumable VA loan, and for whatever reason, they don't take over the entitlement. So, it can be risky if you're not having a savvy real estate team with you to make sure those things are taken care of on the back end of doing that loan assumption, and everybody is going to be relieving the seller of that obligation for that loan product, because otherwise, unfortunately, you'll still be on the hook with your eligibility for purchasing another property as that seller if the buyer didn't take that themselves.
When you are purchasing a home, please make sure you're dealing with an experienced loan officer and agent. Okay, and why I say that is because what happens is that you lose the portion of education that experience or insightful education could provide you. And when you make a mistake doing home purchase, it can either cost you money or it can either cost you your home itself. So essentially, you want to be able to make sure that you are dealing with an experienced real estate agent, loan officer, a title, just everyone that is on your team. Buying a home is one of the most important purchases of your life. Without doing your due diligence, don't accept everyone, because everyone does not have a fiduciary responsibility to take care of you. But again, this is why we Veterans for Veterans are here, because we want to be able to partner you with those vetted personnel.
Absolutely, absolutely. So, definitely, Kenneth, that's really great. Again, so if you're interested in purchasing a home, we just want to be here to let you know that it is possible. You can actually take over and do a loan assumption. There's going to be a lot of options for you to do that now, where it's going to be 100% above board, right? You don't have to go and do the subject to option, where you have to be a little bit more savvy and different things of that nature. So yeah, it's here on the table for you. You can't say you don't know the information. We're here to provide you and be a resource for you. Thank you for your time. We're out. Peace.